Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid, such a sucker. Sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Cheers to another beautiful, successful, and fun trading week, retail trading team. This is Mastro coming to you live from Puppet Show South with your routine briefing. So we're going to begin today's video by starting with a little macro overview. If you did not see yesterday's slides, I encourage you to go check those out if you're interested in macro things. You can find that link in the description of this video. It's in that routine trading folder, like all slides from our lovely briefings here. So I'm just going to do a quick sound check to ensure we do not have to do two briefings like we did yesterday, so please stand by. All right, we're good to go. So, again, I'm not going to read to you the slides that are going on here. I'm just going to really quickly go over them, and you can find those, like I said, in that folder. So really the main thing that I want to point out today is a couple interesting things going on in terms of the potential bullishness of the market. I would not argue that these are bullish necessarily. I'll let you come to your own conclusions. Yet the first thing just kind of want to bring up here is what's going on in breadth. So breadth is definitely improving, and you can see that just on this little graphic here. This is from that Tier 1 Alpha newsletter. Again, not affiliated. I just always use these for a little macro overview here, so that's where that's coming from. And you can go ahead and go to their website and subscribe if you want the full picture. I'm just giving you what I think are the most important takeaways. So like I said, if you want the full picture, you can go there. So what we got going on here is improvement in breadth. So it's a big difference from even a week ago. And what that kind of is suggesting is not only a sentiment shift. So I saw a tweet yesterday. I didn't include it in here. The tweet had said something to the effect of a shift from bearish sentiment on the market to bullish, and I believe it went from something like 28% to about 54% people are now bullish. So you are seeing that reflected in the underlying movements of the various stocks that are not our favorite FANG friends there. And what you're also seeing is a lot more equity coming in. So a lot more liquidity is improving, and you can see that that exposure is now back above that 57th percentile. Really the most important part of this slide here is it's the highest level we've seen since late 2021. So a big reason that I saw, and I did agree with, that nobody really thought that we could get that extended down move, is there were too many people on the sidelines, and there really was more bearishness and bullishness, if you want to call it that, in the market. And now you're kind of seeing a shift back to that more bullish positioning. So I think the interesting aspect of this is not only that we are still, at least if you believe data, on that brink of a recession there, but like I said, you're starting to see that participation across more than just those FANG stocks. So what does that mean? I don't know. I think it does lend perhaps to the argument that we can now see this move back down, and we'll look at price action and see what's supporting that thesis there. Yet really, we no longer have everybody short. We no longer have an extreme amount of money on the sidelines. So again, I'm not going to read this slide. You can read it yourself here. I think the most important takeaway from this slide I'm trying to point out here is you're seeing a potential analog arise in initial claims versus spot gold. It is we'll call it a niche chart. So obviously History is not guaranteed to repeat itself yet. I think it's interesting thing to watch going forward if you want to follow that initial claims versus spot gold price. And again, if you look at the newsletter here, there's a bit more. Uh, Not my newsletter, rather the Tier 1 Alpha newsletter. There's a bit more to this. Just again, an analog to watch, I think, going forward. And really, the way that I summarize what's going on here is markets climb that wall of worry and then they slide down that slope of hope. So they've been climbing that wall of worry, and we now are kind of in a position where I think there's more bullishness and bearishness across the board here in this market, despite the bad data, despite the fact that we are ostensibly teetering on the edge of a recession. And I think we're set up for a potential reversal of fortunes here for the bulls who've just seen nothing but gains for quite a while now. So that's what I got going on for that macro view. For you and I, for most of you and myself, who are both focused on that short-term action, we'll look at the warm-up and see what today has told us so far. So I think that one of the most interesting things to come out of today's warm-up is, again, you saw that open drive, that bullish open drive, and again, you saw that unwind. So in May, I said that we saw more unwinds of that bullish open drive or bearish, just that general open drive, than we saw in all of 2022. And again, you're seeing that trend continue. You had that open drive again today, which was quickly unwound, and that gap in the SPY was filled with that unwind. So what normally happens here is we tend to auction below that opening price rest of the day. That remains to be seen yet. I thought that was an interesting thing that we saw coming into this briefing and really early in the day there. So the most important levels I think for the rest of today are going to be that 42.85. That is where I think balance is right now, and you'll see that when we go to the TPO chart here in a second. And this 43.03 level, I believe the open itself was 43.05. So that's going to be, I think, the two most important levels as the day goes on here. So we did close yesterday, by the way, outside the expected move. We'll see what happens relative to those expected move levels today. So this is the warm-up document. Again, it's in the description of this video. And again, I do keep this updated as the day goes on. Today, I'm not going to be trading anymore. I am finished with my personal trades, which we'll review at the end of the briefing here. Yet those levels I'll keep current in case any big move does happen. So moving on to price action itself, we're going to start with the weekly chart here. Just really, I like to keep it simple. I don't think it's necessary to look past much more than 3 weeks on these weekly charts because it's showing us everything we need to see. So you can see our super important levels here on the SPY are going to be that 410 to 412. Remember that POC at 412, as I talked a little bit about yesterday. If you look at that volume profile behavior on that graph there, what often happens if we do get rejected near the top of value, which you can see on the right hand there, right about 428, where for now we're consolidating, but potentially getting rejected there. A significant pullback first has to get through that 410 to 412 area on the SPY. So when today's session concludes, that another important level is going to rise there from that 3-week swing that I'm talking about. It's going to be right about that 416 area. So we'll see what happens there. This is that weekly chart. You can see we do have that gap there at 423 as well. So there is definitely plenty of cleanup. Again, we'll see that in the TPO as we move forward here. But the most important aspects of this chart I want to point out are we do have that that ascending trend line from that October 13th bottom, as of yet untested, and right now we're getting rejected near the top of value. Really, if you look on the right hand side of the screen here, you can see that LVN, we're having trouble navigating through that, and as long as SPY is below 428, again, we're still building time and volume near the edge of value here. So the bullish case is we could see that setup 5 occur, yet for now we're seeing a rejection, I think, as we kind of consolidate near the 4 sigma VWAP band, which you can see this little dotted line here is near that 4 sigma VWAP band, and we're pretty far above it on the SPY daily chart, which I'm going to point at right now. And what I think is super interesting about what's going on with that 4 sigma band on the SPY daily chart is right near that 423 gap. So we do not have any more gaps above on the SPY chart. We do have several below, and I think the first and most important of those is going to be that 423 level if price does decide to go explore a little lower there. Besides that, we are just looking at this. We're still in this channel. This is this ascending channel. Bulls are still in complete control, in my opinion, despite anything that occurs intraday. And once we get below that channel, so if you see it here, it's going to be right about that 423 gap. So stay in that daily chart actually, unless we get a really significant plunge, we'll probably this is the bear case. If we do chop lower and near that gap, it's going to probably correspond to the bottom of that channel. So some levels to watch there. And again, those will stay updated in the warm-up document. So I said earlier in the briefing here that I think balance is about 42.85, and you can see that on right here. This is the distribution from the majority of this week. Obviously, we popped above it this morning, and as it stands, we're kind of coming back to explore that good old 4,300 area. I actually haven't checked exactly where we are in the charts right now, but somewhere thereabouts is, I think, about 42.85-ish is going to be that first potential area of balance, and we'll see what happens if and when we do get that push lower. What happens around that single? You can see right there about 42.80. As I said yesterday, I definitely want to keep it in perspective. If we do lose this 42.85-ish level, we tried to lose it a few times in the week. I think if we start making new lows, it's going to be a pretty quick move to that 42.50, that untested, that naked POC right around there. And if we don't get a support there, I think it's a quick move to that 42.25 area where you got several singles, several naked POCs, as well as that poor low. And then finally, if we want to keep going below that, all the way down to 41.90 to 4200 is that last area of really ugly structure that I'm seeing in the TPO. So what's interesting about those potential targets is, again, they correspond to this 423 gap area that we are, or that I'm discussing in the chart here. It corresponds to a retest of that 4 sigma VWAP on the SPY, and then once we get through those, we can start talking about that 410 to 412 area once again. So we'll see what happens there. Really, as much as we wanted to argue the bear case, we have to see something happen in volatility first, and that first level that I'm going to be watching is going to be that 1540 area where we're getting rejected, or where we got rejected earlier today. Until volatility can hold that level, build time and volume above it, the bulls are not really at too much risk. We've just seen a complete crushing of volatility over the past couple of weeks, something that I cannot remember quite to the extent. And I thought a very interesting thing that you saw occurring a lot of these days was, as volatility sold off, the market was red. I believe one day we were down something like 14 points and volatility was down almost 6%. The forward/VX was down almost 6%. So we're not seeing that fear come back to the market. First sign of trouble is at 1540, holding above 1540 on the VX. And I think once we can do that, that's where we might see that move back toward the top of your screen there, where you see that yellow rectangle. That is the first gap, first unfilled gap in the volatility chart here. And again, I think that may correspond to a test of that 423 level. So that 423 level in the SPY is going to be something I'm watching next week on the downside. And obviously, if we want to continue, it's just a move above today's highs. So we will see what happens there. I do think it's pretty clear. I think our levels are pretty nice, and we just got to kind of wait and see what happens. So just a quick review of my trades today. There are 2 tradable moves. I missed the first this morning, so the first was right out of the gate, just kind of playing that breakout trade above. I think 416 would have been the entry. You would have eventually gotten stopped out right about 420ish. So with the ads and everything, it wouldn't have been too profitable. I think it would have been about $200 in profit, nothing crazy. So I am glad that I got the reversal trade instead. So 2 tradable moves. I think my total profits today were somewhere around $400 per account. Nothing crazy, but I'm definitely happy with it. And I like any day that you get 2 nice tradable moves. So those are my entries today. Like I said, the mechanical entry would have been that breakout play, but I just missed that, and fortunately was able to capture some points with the reversal. So that's all I got for you. Really simple day. I hope you have a nice weekend. Like I said, those levels are pretty clear. I think going forward, we have that 423 gap area below, which corresponds to a lot of different other levels that we saw in the charts there. And then obviously we have that high from today. So I'm going to follow up with a newsletter to package this all nicely for you, get that sent out. And until then, and not just until then, but in addition to that, like I said, or like I always say, if you look in the description of this video, you get a link to all the nice stuff, nice resources that I put out there. So if you do find any of those resources useful, if you found this video useful, and if you like my levels, please give the video that thumbs up. That does help with that YouTube algorithm, and as I always say, that quest to get above 20 views per video. So I'd appreciate that, and I'd appreciate any engagement in the comment section of this video or on Twitter, where you can find me at Routine Trader. So regardless, I wish you have a nice weekend. Once again, I thank you for your attention. Stay classy until Monday.